Hello, hello. How you doing?
Hello, hello. Good, thank you.
I'm going to be doing a fairly repeat of Wednesday night show, no?
Okay.
I don't know if for everyone, I'm going to go back through the notes from Robert Kiyosaki.
Righty ho. Thank you for all the hard work you've done on putting that white paper together, the
Oh,
Robert Kiyosaki one. Thank you.
it's a pleasure. Let's get okay. Let's get rocking and rolling. Okay, so I don't see too many people joining us today. Interesting. I'm
Oh,
surprised.
oh,
Anyway, let me let everyone in, and we can get going. You can see it's pretty much 12 o'clock. Okay. So what we're going to do today is we are going to be going through what I learned with regards to the weekend that I spent with Robert Kiyosaki. So I wanted to kind of start off here.
yeah.
And these are just some pictures. And I had my book that was there. It's looking a bit old and tired. And I remind everyone of what so my mom and dad gave this book to me for my birthday in 2001. And they said, we hope you make your fortune, but more importantly, you have good health, many friends, and lots of happiness. Now, what's quite interesting is that, let me actually start with the presentation that I did. So when I did the presentation, I'd never done this presentation before. Where's it gone now? Hmm. Okay. So I did this presentation here, and what I found really interesting is that they wanted us to kind of tie it back to rich dad, poor dad, etc. So I actually went through, and I assume everyone knows what the quadrants are: the E, the S, the B, and the I. So the E is the employee, the S is self-employed, the B is the business owner, and the I is the investor. And what I did is I shared stuff that I've never shared before. So the reason my parents shared that book with me was that in 2001, I was very, very unhappy. I'd been to university, I'd studied hard, I'd got a great degree, I'd literally, passed my degree cum laude, and my very first job in London was a labourer, and I actually kept my pay slip. So I was earning £5 an hour, and I was a labourer, and I even wrote in here like at the time sweeper because that's literally was my job. Now, it's quite a funny story because at my 21st, my father told a story and he said, there's this engineer and he goes to his first day of the job and he goes to his boss and he says, well, what should I do? And the boss says, well, grab a broom. And he says, no, wait, sorry, but you don't understand. I'm an engineer. And he says, what, don't you know how to use a broom? So anyway, that was my dad's joke in 1998 at my 21st. And in January of 1999, and honestly, I sometimes wonder if my dad had something to do with this. I literally arrive on site for my very first day of my very first job, and I say, "What should I do?" And the guy literally gives me a broom and says, "You're going to sweep the construction site." And I was like, "What the shit?" I've like studied literally for 4 years, and I'm a sweeper. So it's quite interesting. I mean, I worked on these type of. I don't have these are pictures straight out of my photo album, but I mean, working on big sites like this and effectively pouring concrete. So this is what I did for 3 years, and I also studied to do my master's in technology. And my whole logic was that no one makes money by plowing the fields if you're a farmer. Like you've actually got to get into the farmhouse. Hang on, who's talking there? Let me just mute that. You've actually got to get into the farmhouse to make money. So I went and did my master's, and you all know my property story, so I'm not going to bore you with that. But then I moved to the S when I basically started IPS when I was 25, and it kind of grew from the S, which International Property Solutions, kind of grew into the B, which is the business owner, and that was very much around. Again, you've all heard the story of like actually doing and investing like an institutional investor. That story of Wimbledon, etc. And then finally, I kind of moved to the I, and I think the story that I've never told before. In fact, I only came up with it for this presentation. Was quite a phenomenal story. So let me show you something that I think is quite amazing. Oh, where's it gone? Yeah. So how's this for a story, okay? So I might have told the story, but I don't think I've ever shown the slides. So this here is the tallest building. Is there anyone here? Just type in the chat room. I don't see anyone that was on the buyers trip. I can't see if anyone was on the buyers trip with me. But anyway, we this is the tallest building in residential building in London, and it's got the biggest penthouse in Europe. And that very day, my birthday, funny enough, was the 9th of Feb. This was the 7th of Feb. So literally 24 years later, since my parents gave me that book, I went down to go meet the investors at the tube station, and I saw the same company that I used to work for. So this company you can just see up in the top here called O'Shea's, and they're basically an Irish concrete pumping company. And I had this surreal moment that if I hadn't been brave enough to get out of that E quadrant, I'd be 48. I'd probably be a site manager. I'd probably be running this site, but I'd still be building buildings. Are you with me? And what I found absolutely phenomenal is that day, there were 20 odd of us sitting in the penthouse negotiating to invest in the building with the developer. And O'Shea's actually built this building. Now, you've got to admit, if you understand the whole ES, BI quadrant, that's going full circle. Because if I hadn't had the guts at 25 to kind of step into the S, and then equally when we were selling houses to step into the B with Wealth Migrate, I would have never ended up in the I. So I don't know why I shared that personal story with you now, but I found it quite surreal to actually do this for myself. And my invitation to all of you is to actually think about it yourselves. And what's your journey been like? I know, Alan, we were having that conversation on Wednesday night. Most people understand the stuff, but they actually have no idea how to get to this investor quadrant. Would we agree on that? So, yeah, I mean, that was effectively the essence of my talk, was around this quadrant, and then how to actually do it, and how do you get paid while you sleep. And I mean, I know you guys are already converted, so I don't need to teach you about Monopoly and all that sort of stuff. So let's go back to Robert, and so this was literally at the handshake was at the private dinner. It was quite amazing, actually. He loves rugby. So people like, Scott, why are you wearing your rugby jersey? Now, for those of you who like rugby, this is a very old rugby top. It's from the early 90s. It's literally the first jersey that came out when the Springboks were allowed to play rugby again. And his number one sport in the world is rugby. He used to play prop, believe it or not. And so he was immediately attracted to the Springbok jersey. So the reason he came over to shake my hand and talk to me was because I was wearing a Springbok jersey, which I did intentionally, by the way. And then this was him and I talking about my book. This was me on stage, actually holding up his book, Rich Dad, Poor Dad. There were about 1,000 people there, and pretty much saying, look, I'm sure most of you are like me. This book has had a profound impact on my life. This is me kind of talking to the crowd, but there's another picture here, which is this one here, where I'm turning to him and actually thanking him on stage for the big impact that this book's had on my life. This is just me talking on stage again. I flew Jonty up, so I know the mastermind members heard this story, but on Saturday morning, Robert started talking, and he started talking about business. He started talking about the schooling system and how it's broken. And then within 10 minutes, he started talking about rugby and how much he loved rugby. And so I literally said to the organizers, they're all from Singapore, and I said, if I get my son up here, will he be able to be accommodated type thing? Because Habana was coming on the Sunday, and he said, yes, definitely. So anyway, I flew Jonty up. It was very expensive. The flights were ridiculous. But anyway, and so this was him, and Robert was so kind to him, like asking questions. Does he like rugby? He actually said to Jonty, no, I'm a number 15, which is a full back. And he said to Jonty, well, you're going to have to grow a bit, as in you have to fill out a bit. And then this picture here, the only reason I took it, it's not a great photo because this guy, Nick, is standing in the way. But this is when he called me over and he told me about the Investor Summit, which is happening at the end of June, that I've invited the mastermind members to come join me. So I'm just waiting for the final details. But in simple terms, it's a 5-day cruise. You leave from Miami, and it's got some of the best teachers and investors in the investment space in America. They get together once a year. It's a very exclusive thing. But yeah, he basically said to me, Scott, you have to come to this. He's one of the speakers, etc. So yeah, and I've actually asked Nick, the guy who's got his back to us, to see if he can source us 5 tickets. So for me and the other mastermind members. Then nothing to do with Robert Kiyosaki, but I might as well share the picture because I have it. Because we were backstage, John T got to spend like 15 minutes with Brian Habana, which Shona and others, if you're not from South Africa, he's the greatest wing we ever had. So like, this is your Lionel Messi of South Africa. I don't know how else to say it to you. Scored more tries than anyone else. And this was him actually signing John T's rugby jersey. And yeah, we just had an amazing time talking to him and asking questions. And one of the things that I thought was quite a cool life lesson is John T asked him, what do you do if you're scared, like, and someone's bigger than you? And his response was, you embrace the fear. And I thought it was quite a good life lesson for all of us in terms of the process. And then, yeah, this was actually just we were in the hotel foyer, and Habana and Robert were just talking to each other and sharing notes. So that's some pictures. And the reason I wanted to share those pictures is because it just kind of gives context to what I'm about to share now. Oh, well, it's not open. Give me 2 seconds. Okay, so just for the record, I'm not going to share this yet, but I've actually put an entire workbook together with checklists and everything. So I'm going to share this. I'm not going to share it all at the same time because otherwise I think people will get overwhelmed and won't do it. But I've basically taken all the stuff he taught and I put it into a freedom checklist. So how long is this document? It's about a 10-page document. Would you be interested in getting this? You can see I've been working hard this week. But before we go there, let's go to the principles. So I think next week we'll go through the workbook. So for those of you who want to join me next week, I'll go through not the workbook, the playbook. So this playbook I've created. So what I did was, the first thing I did was all the information he shared and the key takeaways, which I'm going to take you through now. And then from that, I created a workbook, because there's no point, same as Clem Santa, I don't see the point of having information without actually having a roadmap and an action item. I've created an entire kind of checklist. So I'll take you through this next week. But let's start for this week. And for the mastermind members, while I appreciate you being here, I'm going to do something similar to what I did at the Fireside Chat in terms of just taking you through the information here. So Robert Kiyosaki's message across these sessions is a powerful call to awaken financially. It challenges conventional thinking around money, debt, central banking, and education, arguing the system is rigged to keep the middle class poor and dependent. I found this fascinating because he didn't just say it, he proved it. Kiyosaki emphasizes the importance of increasing financial intelligence, mastering the 4 intelligence: mental, physical, emotional, spiritual, and shifting from working for money to making money work for you. Using his cash flow game and his real life investment strategies, he reveals how to escape the rat race through real assets, business, real estate, commodities, and tax advantage debt. With inflation rising, AI disrupting jobs, and the dollar collapsing, his advice is urgent. Learn the rules of capitalism or be crushed by them. The world economy is collapsing, and I'll explain more about that now. And you better be prepared. So that's the kind of the synopsis. The key takeaways, there were 10 key takeaways that I found. And by the way, if you've got any questions, just type them in the chat box or any comments or anything. I'd appreciate that you're understanding. Okay, so the first is money is fake. Fiat currency is not wealth, it's printed money. Real wealth lies in real assets like gold, silver, Bitcoin, and real estate. I was quite surprised how much he went on about Bitcoin, to be honest. Like for him, gold, silver, and Bitcoin are the same thing. As they print money, the rich get richer. And this is an astounding figure. The American economy is printing $1 trillion of debt every 100 days. And he didn't say the crash was coming. He said we were in the middle of it, which I find really interesting. Like it's basically happening all around us. The cash flow quadrant in real life. So moving from the employee, self-employed ES quadrant to the B, business owner, investor, and ultimately if you want financial freedom. And I did put this on the WhatsApp group, but this game, I actually own this game. I've got it downstairs, but I've never really been able to play it because my son is too young and whatever. And I didn't know this, but there's actually an online game and it's free. So you can play 6 people at a time, can play the cash flow game. And you can obviously be anywhere in the world. And or if you've got no mates, and I'm being facetious, you can play it on your own. Like you can just play against the system, you can play against others, etc. So I'm going to play this with John T. Just want to try and find if I can find that picture that I found earlier. How do I get that? Let me just, I know this is very small, so, but in simple terms, what happens in the beginning is you stay in this middle thing here, and the whole idea is to get out of the rat race. So your passive income has to be more than your monthly expenses. Now, it's just like real life. You end up having kids, you get married, you buy doodads, which is basically where you waste money on stupid shit. And the idea is that you've got to get out of this rat race. And then once you get into this outside circle is where you start to become an investor. You can buy real estate, multifamily, stocks and shares, etc. So yeah, just as my interest, I'd love to know, you can type in the chat box if you want, if you'd be interested in organizing. I've been thinking about us actually organizing some online games. It is time consuming. So to do a game takes about 4 to 5 hours, depending on how good people are. So it's not a 20-minute game. You would kind of have to put an afternoon aside or something. But I'm definitely keen. I'm going to do it not this weekend, but one of the evenings or the weekend. I'm going to play, and I'm just going to put it out there if others want to join me. Because we did play on Saturday evening for about an hour. And I think my biggest takeaway from that was actually I could not believe how little people knew about investing. In my group, I had a doctor. I know it sounds like a joke, but it's not. I had a doctor, a lawyer, and an engineer, and I had someone who worked at a bank, and none of them had any idea. Like simple stuff. Like if it says the share price range goes from $5 to $30, and you can buy the share at $30, do you want to buy it? Yes or no? And they all sit around going, I'm not sure. Should we buy it? And I'm like, you retards. Like they've told you that the range is to $30. You're buying it at $30. You're basically buying it at the top of the market, which is why everyone never makes any money, because they always buy at the wrong time. Why is that coming up? Why is that coming up? No, man, what's going on here? That's so weird. Where's my PDF gone? Sorry, let me just close all these things. I don't know where my PDF's gone. Okay, let's try again. I'll just open it again. What the hell's going on? Oh, there. Sorry, No, I'm not. You're sharing. You're not seeing this. You need to see this screen, hey? Yeah, can you see the screen now? Yeah, okay. So the cash flow quadrant in real life, and in simple terms, what he said there is with the game is that, rather play with fake money, play money than lose real money. The system is rigged. Central banks, taxation, and school systems are designed to keep people poor. Don't play their game, learn to outsmart them. One of the things I found bizarre was how opinionated, but quite frankly, downright, like really quite rude about the central banks, about how they effectively are Marxist, about governments, and basically how you have to beat the system. Use debt, don't fear it. Rich people use debt to grow wealth and avoid taxes. Debt can be a tool, not a trap, if used for income-producing assets. I'll talk a little bit more about that just now. Crashes are opportunities. Wealth is built during economic crashes. The middle class panics. The rich buy cheap assets. Train with fake money. Learn by playing the cash flow game. Make mistakes in a safe environment to build financial intelligence. Invest in micro. Think macro. You can't control the global economy, but you can control your investments. Own assets that produce income and appreciate. The difference, so just quickly there, what he was basically saying is, like, you and I can't control the Fed and whether they put up the interest rate or down or whatever, but we can control our own balance sheet. We can control our own cash flow. So we can be in control of our own personal finances, which is what he talked about, the micro, and we can't really control the macro. Then the difference between fundamental analysis and technical analysis, we're going to talk about this in a lot more detail just now, but the fundamentals are all about your income and expenses, your assets and your liabilities, and it's all about the numbers. And there's a whole section I'm going to go through, but effectively it's your balance sheet. It's your income statement and your balance sheet. So this is what your fundamentals is about, and it's effectively all about the numbers. Then the technical is about pictures and charts, and it's all about emotion. So that's basically charts going up and down. Now, I did say this on Wednesday night, but if you haven't watched it, I would strongly recommend mastermind members going and watching the session that we had on the 15th of January with James Painter, because I think he's one of the best in terms of technical analysis. Like, where's the stock market going? Where's currency going? Where's crypto going? Where are commodities going? All of that sort of stuff. So I'd strongly recommend watching that. And even if you have watched it, possibly watching it again, because it's really important. And basically he said, like, if he had to choose, he would choose fundamentals, because that's how you do it properly. But if you understand technicals, you can get the timing right as well in terms of that process. Okay, and then the next one, which I'd never heard before, and I really enjoyed it, he calls them seekers. So people like all of you, myself as well, we're all seekers. We're consistently trying to learn about money and wealth. I mean, you're either part of the wealth hackers or the mastermind. And the moment you make a decision to learn, to seek answers, to invest in financial education, you begin your journey out of the rat race in terms of that process. I'll talk more about that now in more detail. And then lastly, I asked the question because Johnny was in the room, and I said, well, you've said the schooling system is broken. Like, what should we do? You know, as parents, what should we do? And he pretty much said, not only for our children, but for ourselves, all of us have a mission and a job to do. When you find your purpose, angels will appear and help you achieve it. And you too can do magic. We're all here for magic. And then with children, he pretty much said, you know, just listen and they'll tell you what they want, which I found really interesting. Some of the action points for investors. So play the cash flow game at least 10 times, treat it as a practical training. So just in my interest, I'd be interested, you can type in the chat box, has anyone here played it 10 times? I haven't, by the way. In fact, I've probably played it twice, ever. I've definitely played Monopoly 10 times, but I haven't played Cash Flow Quadrant 10 times. And when we did the mastermind on Wednesday night, no one had done it 10 times. So I'd be interested if anyone's played it. So if you just let me know if you've actually played it before, and more importantly, if you've played it 10 times. Audit your current assets. Are they real or paper? Accumulate real assets, gold, silver, Bitcoin, real estate, business. Chaz says never played. Glenn says not even played it. Thomas says many times, much more than 10. Oh, well done, Thomas. You're the only one so far that's told me they've played it 10 times or more. So yeah, congratulations. Maybe you can come on our online one and teach the rest of us. The fourth one there was learn how to use debt strategically, not for liabilities. Partner with smart tax advisors to maximize legal tax reduction. Track the macro environment, but manage your investments in the micro. Prepare for the crash, have liquidity and a game plan. Read or reread Rich Dad, Poor Dad, Cash Flow Quadrant, and Fake. So I've read these two books. I haven't read Fake. This has just come out, by the way. They had it there. They didn't have it for sale, unfortunately, but yeah, they had it. Like, I didn't even know it existed. It's all about fake economies, fake money, and what you actually do to succeed. And then lastly, join communities of like-minded investors who think globally and act financially. I find that fascinating. Like, you know that I say that all the time, but it was really interesting that's what came from him. Okay, so let's go into this in a little bit more detail. Are you with me so far? Is this making sense? Yes, no. Shona, are you ready to teach it back to someone else for your second time? Alan also his second time, so I'm gonna keep quiet and you guys can teach it. Okay, the four intelligences. So Robert opens by stating the true success requires integrating four intelligences: mental, physical, emotional, and spiritual. So mental is financial education, strategic thinking. Physical is energy, health, and endurance. Emotional is resilience, managing fear and greed. And spiritual is purpose, mission, and why behind your wealth. So I found this really interesting because firstly, he said in school, we only taught mental. So we literally taught stuff and we just regurgitate it. And he basically says, it's a complete and utter waste of time. He went on to also say that the one that's the most important, particularly because we've got these tough economic times coming, is spiritual. Like, he said it's really important that you work on the spiritual. And any of the courses that you've done with me, you'll know that I always start with the why, which I originally learned from Simon Sinek, The Power of Why. So I just find it amazing with all of these kind of teachers, if you want to call it, the really true tried and tested principles, call them the fundamentals, call them the laws of nature, I don't care what you want to call them. But you notice how they keep coming up over and over again, like Simon Sinek, The Power of Why, Robert Kiyosaki, 98%. He said if you could pick one of these, you want the spiritual one. And it's so interesting because like even in business, companies that are purpose-driven, mission-driven are much, according to Jeff Bezos, are much more successful than those that are just out there to make a profit. He believes that traditional education ignores all but mental, and even that is flawed because it teaches obedience, not wisdom. One of the things I found fascinating with him, and this wasn't just in the private like dinner or the one-to-ones, this was on stage in front of 1,000 people. His disdain for the schooling system was quite unbelievable, actually. and he's certainly not shy to share his opinion. The cash flow game is a learning tool. It stimulates life emotionally and financially. It teaches you how to handle risk, money, opportunity, and failure. Kiyosaki insists, play it 10 times. What happens on the board will happen in real life. This is experimental learning that replaces outdated schooling. And what he said is that by playing the game, you're actually encompassing all four of these, which is why it's so powerful. Okay, fiat and the central bank system. So money today is debt. Since 1971, Nixon took America off the gold, and all currencies became fag. Central bank, like the Fed, are not federal. They have no reserves and are private institutions. They print money and create inflation, which benefits the wealthy. They own the assets and hurts the middle class. And what was really interesting, I can't remember the exact date, but I think it was around 1912. In 1912 was the time that they brought tax into America. And at the same time, they created the Reserve Bank and started to create inflation. And what he was basically saying is before 1912, if you don't have tax, you don't have to have inflation. But to have inflation, you have to have tax, which is why he is adamant on trying to do whatever you can to legally pay as little tax as possible. Central banks are Marxist. America was founded as a tax-free nation. Now we tax income to pay for fiat debt. Hopefully this is all making sense. I know I'm going over it at quite a high level, but you could go and chat GPT any one of these and get a lot more detail. Real estate versus paper assets. Robert Kiyosaki teaches that assets fall into four categories, and you can see here that I wrote order of importance with the outcome to own commodities. So in simple terms, he said start with a business. Like you want to build a scalable cash flowing company. You then take that money and you buy property. So what he said is all business owners should be buying property, real estate. When you buy that property, you can use, so this is in America, it's not necessarily all over the world, but certainly America, you can use depreciation and you can use leverage. So leverage is where you can put down a deposit and borrow the rest from the bank, and you can get the tax benefits. So he basically said that you use business to create cash flow, and you use real estate to accelerate your wealth expansion by the three things of depreciation, leverage, and tax benefits. The next asset is paper assets, stocks, bonds, manipulated and taxable. He doesn't like them at all. He's very adamant on this. And he said the only time he invests in paper assets is where he creates his own company. He took a company to IPO and sell it. And he pretty much said, allow the other fools to buy into it so that you can make lots of money doing that. But he says that the top three, specifically 1 and 2, it's all about making more money so that you can buy commodities, gold, silver, oil, Bitcoin, because they're protection against inflation. I don't like anything they can print. I like things God makes, gold, silver, oil. With me? Yes? No? Okay, taxes and depreciation strategies. Wealthy investors use depreciation and amortization to reduce taxes. Example, buy 10 million of real estate, you can depreciate it by 10% a year, so you've got a 1 million tax write-off. You combine with leverage debt and cost segregation, and you end up paying 0% tax. So I hope that sort of makes sense to people, but this is what you're talking about, where he talks about depreciation, tax, and leverage, and how you can actually own property and have it tax-free. He warns, you better have a good accountant and attorney, push the law, stay legal, but push it. So again, I've said this already, but it was all about how to do it as tax efficiently as possible. Then how to use debt to create wealth. Debt becomes wealth when it's used to buy appreciating income-producing assets. That word there is the most important part, income-producing assets. So in South Africa and in Australia and other countries, people buy properties that are not income-producing. So they basically, like, it's actually costing them money. And they say it's a good investment, and it's not, because it's actually taking money out of your pocket. Like, you've got to have an income-producing asset. The example is he bought gold at so he bought gold at $300 an ounce, and now it's worth $3,500. And he then used that profit to buy a $4.5 million house, $1 million house. But his cost for the house was only $450,000. And if you understand what I'm saying, he bought gold, I don't know how long ago, let's say 20 years ago, at $300 an ounce. And now gold is worth $3,500 an ounce. So the property has gone up in value to $4.5 million. But actually, he bought it with $450,000 worth of gold. Are you with me? And he basically said it's not the dollar that's depreciated. It's not that houses have gone up. It's that the dollar has devalued against gold. I found that really interesting. The rich don't work for money. They use money to buy assets that produce more money. Okay, the power of appreciation plus refinance equals tax-free wealth. So if you buy real estate for $1 million and you let it appreciate to $2 million because of inflation and scarcity, you refinance a million, so you take $1 million out, take the cash, you pay no tax because effectively it's debt. And this is how the wealthy borrow from their own equity tax-free. Why the middle class is getting destroyed? You've got rising unemployment, so AI replacing jobs, rising healthcare, so bankruptcy, especially in retirement, printing money, higher asset prices and housing crisis, and the lack of financial education dependence. The old people are the number one cause of bankruptcy in America because of the medical bills. Then the macro versus the micro. The macro is your geopolitical risks, the central bank corruption, digital currency transition. So it's the big picture stuff. And then the micro is your income, your assets, your tax strategy, and your education. You can't stop the Fed, but you can decide what to do with your next dollar. Does that make sense? Because that's really quite important. And it sort of comes on nicely to the next thing, which is this fundamental analysis. So we've already kind of talked to this a little bit, but let's go into it in a bit more detail. So this is the picture. You might want to screenshot that, by the way, because this was one of my two biggest takeaways from the 2 days, was this diagram here. I'd never heard of it explained so simply. In between, maybe others had, but I'd never heard of fundamental and technical. Okay, so fundamental analysis focuses on the financial foundation of investments. It involves examining tangible metrics and financial statements, such as income, expenses, assets, and liabilities, to evaluate the intrinsic value of the business or investment. It answers the question, what is this really worth? Core tools include income statements, balance sheets, and cash flow statements. It evaluates long-term viability, profitability, growth potential, and sustainability. Personal finance, it means understanding your own income versus expenses, cash flow, and assets versus liability, net worth. And for investors, it's about evaluating the health of the business or the market. So, and again, I remind you, it's all about the numbers. The technical analysis, by contrast, is focused on market behavior, sentiment, and price movement. It interprets price charts, volume patterns, and indicators to predict future movements, based not on what something is worth, but on how people feel about it. It answers the question, where is this going next based on past behavior? It uses charts, candlesticks, patterns, that's that red and green stuff, moving averages, support resistance, and indicators like RSI or MACD. It's a short to medium term focus and assumes all the fundamental information is already reflected in the price. In essence, it's the study of market psychology, trying to measure greed, fear, and momentum. So it's all about emotion. So in summary, if you take focus, you've got fundamental and then technical. The focus for fundamental is financial health and intrinsic value, whereas technical is price movement and market sentiment. The tools are financial statements and ratios. The tools here are charts, indicators, and patterns. Under purpose, it's to identify undervalued assets, and here it's to time entries and exits into the market. Here, in terms of time horizon, it's long-term, whereas technical is short to medium term. And then analogy is measuring your personal budget and net worth. And the technical analysis is reading your mood swings through heart rate monitor. So this is quite interesting because there's no right and there's no wrong. I have shared this with you before, but if you go to Wealth Dynamics, which is the kind of the report that that Roger Hamilton does, and let me just open it up here. So if you go at the top here, this is all big picture, and down the bottom here is all detail. Okay, and on the right hand side it's all people, and on the left hand side it's systems. Now you can see down the bottom here they've got tempo and trader. So these people make very good technical analysis people. They've got a very good sense of what's going on in the market. Is the price going up? Is it going down? Is it a good time to buy? George Soros actually nearly bankrupted the British government when he made he made £1 billion in one day. £1 billion in one day. And he basically nearly bankrupted the Bank of England. That's an example of someone that's an extremely good trader. Now, just my interest, I think it's very valuable to know where you are. I'm a creator. So I'm like Richard Branson. So I'm big picture. But what this means is that I'm good at like business or property or things that are long term. I really don't enjoy stuff that I have to look at every minute, every hour, every day. Day trading, crypto trading, all of that stuff. Even Bitcoin. I bought my first Bitcoin in 2013. I've never sold Bitcoin. I just buy it and hold it in terms of that process. Okay. Does that make sense in terms of long-term versus short-term, medium-term? And what's interesting here, and again, I really enjoyed the way Robert said this, just because I like business and real estate and stuff that's long-term, and whatever, Shona, you prefer to do day trading, that doesn't make it right or wrong. Like what he pretty much said is each to their own. It's just what I enjoy. I obviously share what I do, but others can, so if someone wants to do day trading or wants to do crypto trading or whatever, like perfect. There's no issue with that. But my only advice to someone is really, it's good to know yourself. Like if I try to be a trader, I'm going to bugger it up. Okay. And you probably find if a trader tries to build a business long term, they're probably going to bugger it up as well. That's why you need both on a team, by the way. Okay, why this matters for investors. Robert Kiyosaki teaches that both types of analysis are essential. Fundamentals tell you what to buy, strong income-producing assets, and technical help you decide when to buy or sell based on market emotion and timing. You notice how this income-producing assets keeps coming up over and over again. I must admit, what I'm about to say right now, I feel a little bit arrogant, so I'll apologize. But it's really nice to see all this stuff being reinforced. When I mean, all of you have been through some of my trainings or whatever. And I mean, I go on and on and on about income producing assets. It's really cool to see that I've learned something as well in the 24 years since I read the book. Master both to become smart, strategic investor who makes decisions based on logic and insight, not on emotion and hype. So again, we went through this on the mastermind, and I took you through the Society 5.0. I'm not going to do that today. That's what we went through the mastermind. But I did take you through the 4D wealth framework as well. Where's it gone now? Here it is, yeah. So basically, if you want to predict the future and build wealth with confidence, you need to understand scenario planning. So at the mastermind level, we check in every single month. We get updates from Anthony, etc. But there's 4 things in the 4D Wealth Blueprint. Insights. So you need to know what's happening globally. That's why we check in every month with the mastermind. Blueprint. Use a proven wealth building blueprint. That's why we use the 9 steps. Action. Take strategic steps, not emotional ones. That's exactly what I just taught you, or sorry, what Robert taught here. And then lastly, community. Surround yourself with experts and investors. So it's so nice to see the overlap of all of these things. Then the real estate cruise, why you should attend. The more you teach, the more you learn. So I've got the privilege of teaching you guys, and this is my second time I'm doing this now, and it's really starting to reinforce all the lessons. Be surrounded by experts in real estate, gold, crypto, and macroeconomics. So I think this is like crucially important to be around the best. And literally, that's why that investor cruise is so interesting, because you literally get to be around the best. I know I've asked the mastermind members already, but if anyone in the Wealth Hackers wants to join me in America, the 22nd to the 29th of June, we fly to Miami and we go on a boat cruise for 5 days. And there's the top in America and internationally around real estate, gold, crypto, and macroeconomics. So they do it every single year. It's extremely exclusive. And yeah, if you're interested, just type in there cruise so that I know that you talk, because Bagwandas, you said yes. I don't know if that's what that means. So if you're interested in the cruise, just type cruise and I can let you. I don't have all the details. I'm chasing them to find all the details right now. What Kiyosaki says or implies about seekers. So this is the part I found really, really interesting. Alan, I think the cruise will be amazing, dude. For the way that you love to learn stuff, you're surrounded by the basically the best in the industry. I'm definitely going. I think it's going to be amazing. And we basically get to spend 5 days with these people, and it's exclusive. It's quite expensive. I haven't got the final prices yet, but it is expensive, which is good because it's not like being in the room with Robert Kiyosaki now, where there were 1,000 people. There'll be a few of us, and we'll get to spend time. And the best part is, I'll wear my Springbok jersey, and because I've just presented with him, hopefully he'll remember me, because he literally called me over personally and said, "Scott, you have to come on this cruise." And then my mind went straight to, okay, I'm definitely going, but how could I get some places for the other mastermind members? Okay, which is a perfect segue into seekers. So what Kiyosaki says or implies about seekers. So seekers are the ones who escape the rat race. The moment you make a decision to learn, I'm just going to mute who's talking. Okay. The moment you make a decision to learn, to seek answers, to invest in financial education, you begin your journey out of the rat race, Rich Dad, Poor Dad. He contrasts seekers with employees who wait for a raise, highlighting that seekers take responsibility and initiative. They ask better questions, look for better vehicles like business or investment opportunities, rather than accepting the default path. Seekers value financial education. Kiyosaki believes that the traditional education system creates workers, not wealthy people. Seekers are the ones who question the system, read financial books, take courses and attend seminars like his, and learn how money works. He sees this trait as essential to becoming rich. Seekers know that being rich is a mindset shift. It's not the money, it's the mindset. Poor people blame, rich people seek answers. Kiyosaki, paraphrased. Seekers are humble enough to say, I don't know, but I want to learn. They stay curious and open-minded, and that's what leads them to opportunities others miss. I seem to remember, Shona, we actually had this conversation last month in the mastermind. It was either mastermind or one of these sessions where people were saying, sometimes it goes over your head, but when you hear and you're in the environment and you're learning, listening, it's so powerful. And that's why I know for a fact that anyone that's a wealth hacker or the mastermind is a seeker, because we're all trying to learn. And I'm sure you've seen me do it often where I'm like, Anthony, I don't know what you're talking about. like, explain it to me. And even the stuff with Robert Kiyosaki, I mean, if you think about it, he was talking to a very unsophisticated crowd. I mean, most people in that room don't understand half the stuff. And I had to really pay attention. I took lots of notes. I had to really pay attention to really get to the essence of what he was trying to say. Seekers become investors or business owners, B or I. Kiyosaki's cash flow game shows the path for the E, employee and self-employed side, to the business owner and investor side. They seek partners, they seek knowledge, they seek mentors, and they seek cash flowing assets. Now, don't you find this amazing? So I mean, I didn't know this stuff until I went to see him this weekend. But don't you find it amazing that our paid framework is partners? Okay, he had that. Like deals, access to deals, he had that. The right information, you could argue that's mentors. That's probably the one that's a little bit like nuanced. And then the one I've got is diversification. He doesn't have diversification. But it's just interesting how, like, again, the fundamentals keep coming up over and over again. And then seekers must be aware of false gurus. One of his key warnings is that seekers are vulnerable to hype and scams if they aren't grounded in financial education. He urges people to ask, what's the teacher's real life experience? Do they make money teaching or from what they teach? In other words, he encourages wise seeking, not blind following. This one's really cool. I've met a lot of people in the speaking industry that basically make money from selling courses. And I mean, there's one guy in particular, I'm not going to mention his name because I'll probably have defamation of character, but he stood on stage telling everyone what a hero he was and how much money he had and everything else. But he was actually consulting to our business. He was helping us like grow our brand. And And the way he chased me for his monthly salary check was not coming from someone that had lots of money. And I always found it a complete and utter scam, if you want to call it that, because he would tell everyone how bloody wealthy he was and all these properties he had, but yet he couldn't pay his bills at the end of the month. It was astounding. And I think that's what he's saying here. You need to make sure you're dealing with people that are actually doing it. And that's why I love it when I have the platform and I log in on my account. I literally show people the investments I've got, the cash flow I'm getting, etc. Then Kiyosaki on the internal journey of the seeker. Seekers are going through a transformation. They move from fear to courage. They move from security to freedom. They trade comfort for possibility, and they replace dependency with empowerment. This mirrors his own journey from working for Xerox to becoming a real estate investor and best-selling author. In summary, Kiyosaki sees seekers as heroes of financial freedom journey. They're not defined by what they have now, but by what they choose to pursue. The seeker mindset questions everything, learns relentlessly, and takes bold action. So now I've remembered where we had that conversation. It was in our accountability session on Wednesday morning, where you said sometimes you feel stuck, because you want to be able to have more money to invest. We all do. But it's just this, and I wanted to reinforce this for you, was the seeker mentality of learning and growing. Like that has an intangible benefit massively as well, in terms of, and that's why I actually added this whole section. I didn't have this in until we did the mastermind on Wednesday night. But I really enjoyed this whole section on what seekers are, because my essence with this stuff is what I learned in India. It's that be, do, have. Most people kind of think that they've got to have money. And once they have money, then they'll, be like a wealthy person, and they'll do cool shit like holidays or pay not tax, what's it called? Donations and stuff like that. But actually it's the other way around. It's be, do, have. You have to be the person first. Then you do the things you need to do, and then you're going to have the things that you want. I don't know if you've heard that before. I'm sure you've heard me say it, but it's one of the more valuable lessons I've had. And what Robert's saying here, and it's such a valuable principle, is be the person you want to be, do the things you need to do, and then you're going to have things that you want. And I think this is phenomenal, because the seeker part, which there's, the whole section 12, is all about being the person you want to be. And then the thing I love most is that our platform allows you to invest like the top 1%, to invest alongside the top 1%, so that you can, you can really be it. And then finally, in conclusion, learn the game or be played. Kiyosaki's message is clear. The rules have changed. School won't teach you. Politicians won't protect you. If you don't take charge of your financial education, you'll be crushed by the very system you trust. Play the cash flow game, buy real estate assets, use debt, avoid taxes, prepare for the crash, and above all, become a teacher. So I want to, what's the time there? Okay, so I want to do what we did at the mastermind, and I'm going to break us into groups. So I'm going to do a breakout room, and I'm going to put 2 people in a room. And what I'd love you to do is just have a little conversation between the 2 of you. And specifically, I'd like you to mention one key takeaway and one key action that you're going to make based on what I've shared with you. Is that cool? Because I want you to synthesize it. It's so valuable if you synthesize it. I can see 2 people have run away because they clearly don't like breakout rooms. Okay, so I've got 8 breakout rooms here. Let's go and put everyone in. I'll see you back in like a couple of minutes. Let's say.
Can I just ask you, highlight a few points you brought up today?
Yeah.
First of all, I think we were very privileged that you were able to go to that seminar over the weekend, and you were there too, and you're bringing us back information here, which we're listening to. A comment that you brought just now as well, you said very few people know anything about investments. You were with a doctor or whoever it was. I agree with you. Very few people know what's to do it. And then you mentioned in one of the courses there that there's a crash coming. And all you hear and read or whatever about, there's a crash coming sometime, I don't know when it's coming. So what I'm saying to you, with you, we're lucky to have, we can speak to you, you know what's going on, you keep up to date. You've got also Kalia. So you've got yourself who knows how to trade, and you've got Kalia who's an accounting set or whatever. So yeah, I think you've got the best of both worlds. My question to you is, why can't you come back and say, to your people, this is what I believe you should be investing in. A, B, C, D, the following. How do I prevent the crash? This is what I should do. This is what's coming on, or whatever. The first thing people are going to say, oh, well, I can't give any advice, whatever. But here you've just been telling me on the machine, I could go to a tax man. I don't have to pay tax. I can go to an attorney on those property deals that you were speaking about. So the question I'm really asking is, it not possible that you can take all this information, because there's no better person than you. You've got all this stuff. I mean, I've never seen so much information on your. In fact, there's too much. I get lost. And you've got to obviously break it down and do read it and whatever, what you put into this thing of yours. Why can't you come back and say to your investors, this is what I believe you need to invest, or with Calio. Yes, you need property, you need shares, you need this, you need that. And yes, it might be different for many people won't have it or don't want to put in property or whatever, but there must be 4 other things that they can put it in. And leave us with stuff that we can really go down and sort out our portfolios, get the stuff to grow. And if it's not growing, we can amend it in order, instead of waiting for a crash now to come and take all our money.
So, look, I think, Alan, what I try to do on day 2 of when we do the diversification challenge is I actually take people through, like, what are the top 15 most recognized assets? These are I've got the PowerPoint here. Oh wait, I'm not sharing. Sorry, hang on.
Yes, but I know you might have it. I think you should have I don't know how to put it. You should have a lecture or whatever over a period of time. This is what you should be doing in your portfolio, and should be directed at that. You've got all the information. I'm going to go and sift out here equity, bonds, real estate, whatever. I don't know. You never know. And the people who you go to, you can go to all these people in Johannesburg, Cape Town. None of them know anything. With respect, I say it. Yes, they know that you must go and do this, A, B, C, D, but no, none of them learn. None of them are up to date. I mean, I can tell you, I'll keep you here for hours if you don't want to hear, but that's the fact. So what I'm raising today, here we've got a Scott, clued up, been there for 21 years. Surely you should be able to come back and give us a nice 2-4 pages. This is what you need to buy. This is what you should have in your portfolio. This is what you should be doing. And once a week, we look at that, how it's going. And then, yes, you can't guarantee anything, but at least it'll put people like me on the map to say, shit, I've got now a structure on my investments. I'm in A, B, C, D, E, F, G. This is what's could be happen. Watch this. It's not going well. I dispose of it, sell it, buy something else. I think it would add so much value to people, because when you go around, people haven't got a clue.
Yeah, no, look, Alan, I think I'm glad you bring it up, because I'm thinking to myself, like, I do take people through this presentation. I take them through the principles of what we don't look at. I then kind of go back through the commonly recognized and say which ones we do and don't do, and then which ones we kind of recommend and why. And I think what you're saying is that I need to take this and go into this in a bit more detail and explain it, in terms of...
Yes, you've got to come back and say, because no one's doing this, Scott. You've got to come back and say, you're I'm done with diversification 5, Scott, this is what he's doing. And you put down the 10 things we need to go and buy investments to help us build investments. That's the only way. Yes, and then every week you can look at it and say, it's not going well, whatever, get rid of the share, buy more crypto. All I've heard is, at the beginning of the year, all I heard is don't touch crypto. It's going to crash the shit up. Now, if you go back, buy crypto, please. It's going to get to 100 million a thing and whatever. So there's so much confusion that you actually don't know what to do. And I challenge anybody listening to us today on your thing if they don't agree with me. So we need, if I can put it bluntly, a leader. I'm a follower. I don't know what the other people are. So I need help how to structure a portfolio, check what I'm doing. Yes, you can, you'll make errors somewhere along, but all of us are making errors. And I don't want to hear you. And all you go on, I go on all over to listen. This is, I just want to warn you, this is not for, I don't know, that whole long story. They should change the legislation. You can tell me to go and buy a property and pay no tax and get out of an attorney, but you can't tell me what I should be buying and in an investment story. So people take your money, they do what they like with it, because not that I'm looking to go and challenge, but it's the process that I'm analysing. Never heard, no, I can't give you any proper information because the law says A, B, C, D, but you're going to tell me not to pay tax and go and buy a property where I'm going to lose or something.
Yeah. No, look, I don't
know if you want to think about it. So some of my process can diversification not give us a schedule, what we should invest, take it back to here, and at least put us on the right track to buy and sell and make money.
Yeah, no, I hear you, Alan. So look, I definitely think I can expand upon what I've learned with Robert. Obviously, I'm doing a lot with the Calio team and actually expand on that. I mean, it's just interesting what you said around crypto, because when we did the thing with James in January, and I was just looking at, I mean, if you look, Jan is we did that thing around here, around the 15th, so it was somewhere around here. 15th of Jan was the day we did it there. And he basically said, look, it's going up. And so much so that my son was quite excited. So my son invested and we put 1,000 Rand in. And if you look at it, it's actually just gone down. My son's like, this trading thing's really shit. My 1,000 Rand's gone to 700 Rand. But what's interesting is that in the last month or so, it's gone back up to the same price. And as you said, Alan, some are saying it might go to 150 or even 250.
Yeah, but that's going to happen on anything. So you've got to decide, do I want to go into crypto to get it? It's going to be all I'm told is crypto is going to be the currency for future life in 5 years' time or something. I don't think it's going to be, but I'm no fundi on all of this. Coming to you, all I know is when I ran a business, I made money. Got people in the room, like I'm saying to you, what do we need to do to make profit in this business? We made some mistakes. Well, we fixed the mistakes, didn't do it, sold, bought, did something, and made a bomb full of money. But people took together, whatever, and we expanded. And there is nothing in this investment world here that you can take your money, put it in there, let it grow. Yes, something's going to come. It's not run like a business, This is a money-making racket. It's a money-making racket.
Like we said, Alan, we are trying to change it between ourselves and Calio. And look, it is shown. You are correct. We've got a.
Are you correct? Am I just talking?
No.
People,
you're right.
Ask.
But the problem is we play in a regulated environment. So I, as an example, am not certified or regulated to actually give people financial advice. I can give you my opinion. You'll notice whenever I talk, I always.
Well, I'm asking. I accept that. I just want your opinion. Your opinion, I trust. And if I want to follow you, then if it goes south, well, I can't come and shoot you. I trust you. I certainly don't trust myself doing this. How many people up there trust themselves? That doctor and that lawyer and those two, what did they do with them? What do they do with them? And there are hundreds of people like this.
No, completely. But and I think the point being is one of the reasons I partner with Calio is they've got what's called a Cat 2 license, which actually allows them to take someone's money and invest it on their behalf, and actually give advice and effectively. And it's why I partner with them, because it allows us to be able to do that and to provide that solution. But I think what you're saying is very valid. I think one of the challenges that I have is, as you said already, I've got so much material that when you ask me a question, I can be, oh yeah, that's day 2 of the challenge. But when it's everything it's too much stuff, and people sort of maybe struggle to contextualize, which is why I'm trying now to build these workbooks and white papers. I know the mastermind members know what I'm talking about, where literally everything that we did, there's the market update as an example, that Anthony took us through, and I literally take what he said and I build it into an update 3 or 4 pages long, so that we've got it basically. But I'm very purposely doing this now. There's the exponential technology one as an example, that also I did for the mastermind members. But I'm doing this on purpose because what it does is 3 things. Obviously, you can listen to the hour and a half, 2 hours, whatever, and it gives you the color that you need. but the essence of the important stuff is then written in like a 3-page synopsis, if you want to call it that. So for me, you're getting both. And then the third thing, and I mean, selfishly, I mean, I say this all the time, so hopefully you all know it, but by me doing this, it's reinforcing the knowledge for me. So I'm not only adding value, but I'm also getting a lot of value from doing it. So that's why I do it. And I think the question you're asking, which I don't have the answer to yet, and I will think about it and I will explore it with Anthony, is how to create like a 2 to 3 page workbook almost on kind of maybe some of the core principles or things to look at. And it's definitely possible. I just need to think about how to do it. Because the one challenge is...
I think what I'm trying to establish is it possible, because I've been around and I told you I'm going to have to die with you. I just don't like it. I'm looking for somebody to hold my hand. I can't make money unless I've got an expert like you who's read all these books, I've got all this information. Yes, you'll make a mistake here and there, but I've got a better chance, but a big chance making a portfolio grow and looking after my funds with a person like you who's been around, or I mean, I know half your life history because I've learned on it on machine, and compared to me, and you have got, you've got too much information here. So you've got to go back and see what's the most critical. I mean, you must know how to make money and what to do, where to invest, where not to invest. How do we manage this crash? You involved with all these people? What chance am I going to get to go and speak to one of those people on there and say, "Geez, how do we handle this crash coming that you're speaking about?" And, brief us on a page.
Let's have a bit of fun with AI. So I'm just going to sit down so I can type better.
Oh,
but I've basically taken the Knight Frank report because this is this is from 2023. It comes out every year, but unfortunately when they did it in 2024, they didn't do a nice pie chart like this. So let's see. I haven't done this before, so I'm intrigued as much as you are. So please analyze this chart. Let's put from Knight Frank Wealth Report of 2024, and let me know based on the last 50 years, including current macro trends, what would be the best portfolio balance approach, and what would the percentages be for someone in their 40s, 50s, 60s, and 70s. Okay, let's see. I've got no idea what to expect here. So there we are. So I mean, I'll print this out I'll share it with everyone. I mean, I'm not saying it's right or wrong. I'm just interested to see what it says. So for people in their 40s, equities 30%, private equity 10%, commercial property 15%, commercial property REITs 10%, bonds 10%, primary secondary home 15%, gold 3%, crypto 3%, and passion other 4%. Rationale: still in peak earning years with longer time horizon, high exposure to equities, private markets, and innovation, crypto VC. Diversified property exposure for inflation hedge. Okay, for 50s, balanced. So what did it say at the top here? Growth plus diversified risk. Age 50s plus. Balanced growth with stable yield focus. Equities 25, private equity 8, commercial property 20, commercial property REITs 10, bonds 15, primary secondary 15, gold 4, crypto 2, passion 1. Begin to rebalance towards yield and downside protection, bond increase as risk tolerance falls through those still enough equities and private equity for growth. Then age 60, income and preservation with some upside, equities 18, private equity 5, commercial property 20, commercial property through REITs 12, bonds 20, primary secondary 15, gold 5, crypto 1, passion 4. Rationale: Tradition towards capital preservation and income-producing assets. Property and bonds provide yield while equities are retained for growth and inflation protection. And then 70s, capital protection and legacy planning. Equities 12, private equity 2, commercial property 18, commercial property and REITs 15. Do you notice how the property's gone up quite a lot as you get older? Bonds 25, that's also gone up. Primary and secondary homes 15, gold 7, crypto 1, passion 5. Maximize stable cash flow, hedge against longevity and inflation risk. Bonds dominate capital protection. Exposure to gold increases as a defensive asset. Legacy estate planning starts influencing home and alternative allocations. Key macro-informed principles. Commercial real estate remains vital for inflation protection and stable income across ages, split between direct and REITs. Equities should decline with age, but remain part of the portfolio to counter inflation and maintain long-term purchasing power. Private equity and VC exposure is justified in younger decades, but should be scaled due to liquidity and risk. Gold gains relevance in later years as a hedge against monetary policy risk. And crypto remains speculative and should be capped at 1 to 3%. I know you asked that on Wednesday night, Alan, unless highly informed or risk tolerant. So what is it?
So there's a list what we should be investing in, and then you expand on that list and what are those things and whatever. I don't know. I'm the only one speaking here, but I just think, let me give you another thing with you, because I'm retired, as you know, and I've got time. I went and joined a seminar in Australia where they're teaching you on crypto for a year to train you, to be at your side, a private one-to-one once a week, and this for 12 months or whatever, and to get by crypto, etc. What do you think they want to charge in Australian dollars for a year?
I think it's 12.
Everything I need, next to me, a person like, or wouldn't be like you, but a person similar to you, whatever. What do you think they want?
I think if it's the same company we're talking about, it's like 12,000 Aussie, isn't it?
What do you mean? It's 30,000 Aussie.
Oh, wow.
Do you know that it's oversubscribed? Now, I did a bit of research on it. People don't know how to buy crypto. They want a hand to hold. They don't know what to do. All this shit in the market, as I've told you, do this, buy this, get rid of it. And no one structures it, gives you a timetable like you've just brought up on AI. And I don't think it's just a mess. I mean, the other one I go on to is Kane and his wife. I mean, there's 1,500 people going on there 3 times a week. I haven't got a clue what AI is. It's so complicated, involved, and whatever. You ever done it? Just go on there one night. So there's a lot of this stuff, but there's no simplicity putting it together for people that have got money that need to do. Because what does a doctor know about money? What does a farmer know about money?
No,
nothing.
Look, I completely agree with you. I mean, I'd love to know from everyone, including you, Alan, what do you think of what? I mean, I'm so overwhelmed by how cool ChatGPT is. I say to my team, I pay $20 a month. I say to them, if it cost me $500, it cost me $1,000 a month, I'd pay it. It is so valuable in terms of the information. But I think it's phenomenal that I could just do what I've just done there. And I mean, you literally
correct.
Like, it's unbelievable.
But ask how many people are on ChatGPT.
Yeah, well, look, they say it. Everyone says it. Jobs. What's it? AI is not going to replace people's jobs. It's only going to replace people that don't know how to use AI.
Correct.
Anyway, the way I see it, Alan, is I use ChatGPT every day.
Yeah.
And for me, it is my assistant. It takes my ideas and just makes everything better.
No, so you're better than me.
So if I want to write a blog, or if I want to elaborate on something a little bit better, I use ChatGPT. If I want to learn how to invest a little bit smarter, I use ChatGPT. It's a tool. It's an assistant, not a replacement.
Yeah,
but I think you correct what you're saying. I'm the downfall on ChatGPT. But what you've said there, you need to be doing that schedule, Scott, to guide us. And yes, then we can go on to ChatGPT. Are we right? Are we happy? Are we this and that? Do the research. At the moment, you're rudderless with the investments, really. You're rudderless.
Yeah.
That's my personal view of it.
No,
and I need to be structured and fixed, and I'm asking for help. Who do I go to? Give me a portfolio that's straight, easy. Yes, it's going to change up and down, ABC, instead of going to all these people who don't know in town.
Well, just by the way, Alan, this might make you feel a little bit better, because I know you were frustrated that like Calio was not telling you to do crypto, but I've actually, while we've been doing this, I just extended it and I added people in their 20s, their 30s, and also their 80s. Just so we've literally got the broad range, like right the way through. And it's quite interesting here. If you look at percentage, they reckon 0% if you're in your 80s in crypto. So it's quite interesting. Whether this is right or wrong, I mean, we could debate that till the cows come home, but I kind of call it the worldwide intelligence. Oh, what did I just do there?
Yeah, but that's fine. You can put that up there. Crypto, there's only at 70, there's only 1% or whatever it is. Then I can make the decision, say, yes, it's when you're younger, it's why should I do it when my brain's still okay? No, I'm still going to have 10% in crypto. But you've got a guideline. There's a guideline there. Do you understand what I'm trying to say?
No, completely. Well, look, there's
a guideline what gives you, and what then you've got to go one step in. What equity, shares, companies, this or whatever. I promise you'll make a buck of the money.
Yeah, no, look, I really appreciate the conversation, Alan, because you just caused me to create a tool that I think is going to be extremely valuable, quite frankly. Oh. And then what I'm going to do is I am going to run it past Anthony and them, because I'd like to almost have their sage overview. But I think we've just those people who are live here, the 17 of us, we've just created like something that could be a very valuable, like broad-based tool for everyone. And then the other thing,
why don't you put out a survey? I'd love you to put out a survey onto all the people that you've gotten down and to sit down and read. Do you really understand investments? Do you understand this? A simple thing, and get a feedback from people what I'm saying, and you'll believe me that it's correct, and maybe whatever. Let's do a survey. I don't know if you can. Or is it just me that's a monkey?
No, it's not. It's all of us. It really is.
Well, then let's fix it. Life's about fixing stuff and making wealth and chucking down the shit that we're doing. And
well, here we are.
So much at your disposal.
You guys are witnessing me writing a book as we speak. I know we have a time here, but like I sometimes wonder, I honestly sometimes feel like a fraud. Okay, and I don't mean that because it's so easy now to go and get the information, and then you put it out there like you're an expert. But I mean, you all just watched me do it in 10 minutes. You know what I mean? Like it's unbelievable. And I sort of wonder,
a book's not going to help an investor like me.
No. I hear you.
I can read. You can say, Alan, take that book and read it. I'm not going to sit down and take the book and say, well, Scott says, buy this share, do this, buy this crypto, don't do this. You need a lecturer, a live lecturer, knows what he's doing, checking on you. This is what we're doing. This is how our portfolio is going. Why don't you buy a portfolio for this whole group? Put it on there. Ask everybody to put $10 in.
Well, that's exactly what we're trying to do, and that's what Paul O'Mahony and Garth and Anthony and myself.
Brilliant. Then it'll soon get, and then I say, no, I want crypto with my $10, whatever I've got to put in. You want this and do something practically. All this is theory, excuse my language, bullshit. No one knows, no one understands, and you're lucky, or you left on your own.
Yeah.
So you're the right guy that I've come across, luckily, that I think would do this and give the investor the opportunity. What it's all about, to give the investor, people got money, investor, to grow their portfolios, understand what's going on in simplistic terms and whatever. And shit, you come on here twice a week.
Yeah.
Who else, brother, does this? No one.
Well, that's why we all have to tell the world. Well, I will say one thing. It's the most spectacular day. I don't know what it's like in Cape Town. I don't know what it's like in London. But it is the most spectacular day. So I'm downing tools at 3:00 and I'm going on the boat. So it's I got a meeting with Success Resources and Hoppers 2, and then it's time for the boat. But no, but Alan, I really appreciate your input. And I mean, Shona said here, Well, Kejni said, yes, please. Thomas said, millions of people. Shona said, well, that is exactly what Robert Kiyosaki says, talking about you got to be careful of false gurus. If there's a trend like crypto where people think they're going to get rich, there's a course completely. I mean, that's the one thing, Shona, and again, I think I'm allowed to speak freely in this environment, but I don't understand these kind of events that are basically sell-a-thons. And everyone's basically selling you a get-rich-quick scheme. And there's only a few of us that kind of stand up, because ours is not a get-rich-quick. Ours is a get-rich-quick in 10 years. Like, you know what I mean? Like, and but it is based on the fundamental principles, so, I think and Shona said, Alan, you're not a monkey, in terms of, like, I think what you're saying, we all feel the same way, and I think for me, when I consider how much I've learned just in 2.5 years by watching Anthony, where he's taught us about the 6 pillars of wealth and the 3 bucket systems. I hope everyone can remember what I'm talking about there, but where you've kind of got the different buckets and how you basically set yourself up for life based on your different buckets and portfolios and everything else. I mean, there's so much value that's tied up in their knowledge, but that's not accessible to people, which I find really sad, basically.
I mean, I'll mention this. I went to, because obviously Callio's part, I've been to Callio. I think that Anthony's brilliant, and he wanted to do X, Y, Z. Came home, processed. I went back to him. I said, why would you want me to do this when this thing is making money? Is it for you to make fees or me to lose or whatever? I grabbed him. He's a brilliant guy too. He's a brilliant person. That's why you've got the team. Now he says, you're right, don't do that. So you must be able to have a bit of knowledge to be able to challenge somebody when you're going on things and say, I bought crypto. Why should you tell me to do it? It's doing well. I mean, I'm told it's going to shoot up like this. No, Scott says, don't buy any crypto. Well, fine. Then I'll buy $1,000 worth of crypto and leave it there if I want to. You've told me not to buy it. I'm just giving an example of what it is. And then people have got still control of their affairs, but the bulk of it, there's no control here. Yeah. You go to somebody down here, I can tell you a terrific story. You go to somebody who is investing in South Africa and see if they really know their job. You won't hear from them after a while anyway.
Yeah, no, look, I hear you. And I think the point being is as well, it's also why we, between ourselves and Callio, why we also try and have the check-ins every month, because things change and markets go up, markets go down. Trump bloody says something stupid, and you know what I mean? Like, I think we're all in agreement here. I think the question that we have to figure out, and me included, is how to reach more people. That, I mean, it pisses me off. I'm not going to lie, it pisses me off. There's only 17 people here. There should be 17,000 learning this. Like, it irritates me. So congratulations to the 17 of us that are here, but why are there not 17,000 learning this? Because basically what we're teaching now, every single person on the planet needs to know. It's that simple. Like,
correct.
Single person and investing and taxes, like every single person has to deal with it.
And if you've got a business brain, you know that you're not. Let me to myself. I know I'm not coping. I haven't got the best. I'm not putting my money where it should be. I'm relying on other people. All I get is a fat bill at the end. I just want to see growth. You can have half some of the profit if I get it. Yes, mistakes will be made, and I've learned that in business. It's not even a debate. But certainly when you're going to a new field where you haven't been in, you need top-class people like Scott and Callio. You've got the best to help you put a structure, portfolio together that you can run with it, do things, analyze those stuff, and you'll see you'll grow from weak to strong to brilliant.
Yep. No, I agree with you.
Because you're not doing it, Scott. You're coming in here and you're giving us all this stuff on there, which is brilliant. We need to. I promise you, when you go off the screen, no one will remember anything you've told us unless you'll send me the stuff. There's a shit house full of stuff to read. So you have to be the leader. Yes, you must give us all the stuff that you're doing because there are people that read and whatever. But the bottom of it, you've got to extract the stuff and put it in and say, this is what you've got to do.
I'm doing it for you.
I'm sorry about that.
I'm doing it for you as we speak, Alan. I'm literally building it as we're talking. The one thing about me is I'm an action taker. I'm always so yeah. But it won't be.
Another thing I'll give you in your favor. You can come on to a webinar here with your guy that you invested with, Scott and Kalia, and come and express what you feel, what is going on in the market, and it's really the truth, and speak practically about it. I'm a practical person.
Yeah.
And no one can't do this. You go into this and say this, let's say to investors, they'll look at me and tell me to get out the door. What the fuck do you think you're doing here?
Yeah. Well, yeah, I think it's time to change that. I think, even where you're challenging Calio, I know Evan said the same thing with his financial advisor. Because we're all raising our knowledge, it allows us to have proper conversations now and not be, if you want my honest opinion, and I know it's a bit of a conspiracy theory, but I think that the financial industry talks in acronyms and fancy language to make people feel stupid so that they don't feel like they can make decisions, so they don't challenge the system, so that all the fees can be charged. That's my opinion. If they dumbed it down and made it easy, then everyone would understand all the fees that everyone's paying. That's my opinion.
Okay, I'll end off with another factor for your people on thing. I've been out, obviously, to try and clean up mine because I've had time to go through my portfolio and whatever. And I was asked the following questions. What is your internal rate of return? What is the asset management fees? What is the administration fees? What are the existing IFA fees? What is the surrender withdrawal fee? What is the capital gains tax on it? What is you involved in section 14 stroke, what's section 135, And I said, why would you want this for? He says, well, phone up one of your investments that you're running with, that you've got, and ask them to send you the internal rate of return. Now, if you don't even know the internal rate of return on your investments, the asset management fee, the transfer penalties when I want to sell, the administration fees, and you can't, they said you will struggle to get it. I phoned to test. Am I struggling? You can't believe it. And I said, well, it must be on the statement. Pull it out. So I've been battling. Anyway, what I did, I sent them a piece of paper. Here it is. Signed it. I said, go and get it. Bring it up. Let's see what comes out of it. So it's quite an interesting topic to when you get involved with the second stages of your investment. What's the fees? Who's managed it? How long it's been? What's it doing? Etc. Okay, and you should be doing that for me. Yep. Galileo should be doing it.
Yeah, no, I hear you. I see that Thomas, Elizabeth said they agree with you, Alan. I'd like to read the Robert article. So yeah, Elizabeth, I'll put the link in the Wealth Hacker group for you. I've already shared it with Mastermind members. If you don't, I know you're Mastermind member, Elizabeth, so it is actually in the Mastermind group already if you want it. Thomas, it's about keeping the masses stupid and the finance industry a mystery, open to enable the rulers to grab all they can. Well, that's pretty much what Robert said in that synopsis I gave you. Shona, I'm a practical person too. A question I wanted to raise was that I have taken in as much information as possible, but need examples in practical context to fully understand. This is my mental wall that I struggle to see over. I hope this. Yes, I think if I understand what you're saying, Shona, for me the most important thing is to get started. So like even if you invest $50 in like the different asset classes, if you remember, I put up the where's that thing gone? Day 2. So like in my opinion, it's my opinion. It's not necessarily right or wrong. It's my opinion. But like these are the kind of the top 17, to be looking at to invest in. And my kind of logic would be, you can't do them all on the Wealth Migrate platform, but there's no reason why you couldn't go and put $50, $100 into 10 to 15 of those. And the benefit you're going to get is learning all the way through the process. So you're going to learn what the different ones are. And I think, Shona, certainly from myself, it's, the metaphor I love to use is we all learn to walk by standing up, falling over, standing up, falling over. Like it's the only way to do it is to actually do it. But in the old days, if I'd shown you that thing with 17 different assets, you needed $1.7 million. I'm making up the amount, but because you need like 100,000 per asset to actually be able to even participate. And nowadays you don't need that, so. Okay, Bagwandis agrees. out to line their pockets. Glenn said, this is really insightful. Thanks for the session and the questions, Alan. But I got to jump to another meeting in a sec. Have a good weekend, everyone. So cheers, Glenn. And Shona, I have invested on the platform. Yeah, no, brilliant in terms of that process. Okay, ladies and gentlemen. Well, I do have a 1:30 as well. I'm jumping. It's one of our, funny enough, again, I go down these rabbit holes on our Friday afternoon sessions, but I read the book, The 4-Hour Workweek in 2011. And the whole idea was, how can you outsource stuff? And there's a company in India called VA Guru that basically is a virtual assistant. So I use them for all sorts of stuff. And they're very affordable and very easy to use. And Belba is the guy that owns the company. And I got a meeting with him now at 1:30 just to kind of discuss our monthly invoice, etc. But you'll be surprised what you can get done nowadays for very, very small amounts of money. So that's my...
Anyway, thank you very much for listening and helping, and thanks for the discussion.
No, perfect. I really appreciate the conversation. It's been brilliant. Alan, I always enjoy, people getting engaged and talking about it, because it's these conversations that I think are more valuable than me going through a PDF, because anyone can read a PDF. So, yeah. So
very few, Scott, I couldn't get involved in these discussions if I haven't spent the last 2 years going around to every investment house, going to seminars like yours in Neisner, other seminars, I went to a seminar a month ago, went to London. I had to go there about that flat and whatever. There was a seminar on there with the reals. I went to it. It was 4 days. And what do you do? The stuff I picked up there was just incredible. How dumb people in a classroom of 100 didn't know either what was going on. I said, and it's an industry that there is so much to be made if it's done correctly, because people are crying out for help.
Yeah. No,
there's very little help except bullshit. And you've got all this information. You're so full of knowledge, but with respect, you're not putting it out there. You know what it's like? You're a teacher. You know, when you went to school, you had a teacher there who was a hell of a clever and a good at teaching and math, but he couldn't deliver anything to the students. Do you know what I'm talking about?
Oh, very
so you guide people. There's brilliant people out there that can teach you. I can't do it.
Yeah, no, 100%. Well, you've given me lots of food for thought, and thank you for the conversation, because you've helped me.
What I really do is thank you that we can go on and speak to you and say, please, this is what needs to be changed and whatever. Half of my stuff might be crap or fine. Some of it must be good too. I guarantee if you're going, your bucket money should double.
Yeah, I hear you. I like it.
Have a meeting once or twice a week that you can get 100 people on to train about investments. Calio should be doing it, or you, or proper, and train people. People are crying out for it. If they're honest, because yes, we can do it, but we don't have the. We were not brought up with it from school. At school you're not taught about it. I worked in a bank. I left the SA Perm. No one will even know what the SA Perm was all about. So that's the story. Anyway, enjoy your next meeting. Thanks to everybody.
Thanks, Alan. Cheers, guys. Have a lovely weekend, everyone.
Cheers. Thanks.
Thanks, guys.
Steve, you're also a mastermind member, so it's in the mastermind group. Let me just show you here quickly so that you've got it. So it's in the WhatsApp group, but I know people get lost in WhatsApp. So as part of the mastermind, you can always go to the classroom and you can go to monthly recordings, and you can literally, so if you go to the Calio update, so this is the thing from Wednesday, you can go here and you can see like Calio's commentary plus the synopsis. So it's always down below here. You can go to the Society 5.0 and 40 Wealth Framework. And again, you've got the slides and the synopsis. And then the Robert Kiyosaki thing is here. And then there's the cheat sheet. So
excellent. Thank you very much.
So that's obviously for all the mastermind members. I try and do that the day, so that you can watch the recording, but for those that are time poor, they can read the 2-3 page report. You know what I mean? So I try and I try and put it, it's always in there, because I know WhatsApp, we all get lost and you can't find it, whereas it's always there. Like, so I mean, we can go back and look a year ago if you want to, you know.
Yeah, brilliant. I'll do that.
Cool. Okay, thanks everyone. Have a wonderful day. Cheers.